Hey guys, it's Ryan W. here from Bearable Traders. Just wanted to do my recap for you. So as some of you may know, I'm actually trading futures right now. I'm trading the E-mini S&P 500, and the symbol for that is, and my platform is at ESU18, since we are now in the September contract. And I have to say, compared to trading to stocks, it's definitely slower paced and more technical, which is something I really prefer. But overall, I'm really enjoying it. You know, I'm still kind of playing around with it, but really, it's pretty awesome. So with that said, let's jump into the recap. First things first, this week is going to be a little tricky just because we have quadruple witching on Friday. And what that means is we have index futures expiring, we have market index options expiring, we have stock options expiring, and then stock futures expiring. Now, what that means is there will be increased volatility, but a lot of times we get stuck in a range because obviously these contracts, you know, they're set to expire at a specific, you know, price, of course, and time at the end of the end of this week. So typically we don't see much expansion in price. So as is evident today and was evident yesterday and will be evident for the rest of the week, is, you know, we're not going to see a lot of extended moves, especially in the indices, just because, you know, they're being held in place. So we have to be mindful of that. Furthermore, we have the FOMC meeting tomorrow, and what that means is once again more balancing or just being stuck in a range essentially. And looking at my screen here, you can see that the market has basically just been stuck in an overall trend today, or an overall zone today, or range. And, you know, we haven't really had much movement. I mean, we just had a little bit of a breakout here, actually just before I started recording here at 12. And I actually took this trade, and what happened was we have a major resistance level here around 27.91, 27.92, and I saw a nice volume spike. Oops, not used to this pen here. I saw a nice volume spike right here, and a bar that went along with it as it burst through this level. So that's typically a nice bullish sign. You want to see big volume as it bursts through a level. And I also was looking at my time and sales, which I don't have on the screen here, but it showed a lot of big orders being hit on the ask, a lot of buying, which is usually a good sign as well. So that was a quick little scalp trade. I took about a point and a half out of it. About a point and a half out of it. You know, and those trades, now this, I really should have held it because as you can see, this support has become, this resistance became support because now we're not able to break back below it. And, you know, the next target on this is the next level, which is around 27.96, I believe. I have to look at my other charts here. But in any event, it was just a quick scalp. You know, I saw the volume, just wanted to, you know, get into it and see what happened. Now, that was obviously the most recent trade. The first trade I started here, so the market opened up right around here. This is the opening bar right here. And it sold off, and, you know, it was just very slowly meandering down. Now, I have a high volume node here at 27.87. What that means is I use market profile charts on the daily, which that's another screen. I'll show you that in another video. But essentially what we're looking for is anywhere there was a lot of volume at a specific price. So in this instance, yesterday's high volume node was here at 27.87. So I, stupidly, I went long right around here, expecting it to bounce off and continue higher. Well, what ended up happening, as you can see, is it completely disregarded this high volume node from yesterday at 27.87, and actually the better entry, which I ended up taking after I took a little loss here, was right here off this support level at 27.86. Now, I know it's labeled red. I just hadn't gone back and updated, changed my colors. Usually I do green for support, red for resistance. I just didn't do that this morning, so, you know, sue me. But, you know, anyway, so it came to this 27.86 level, 27.86 and a quarter level, which is actually on my 60-minute chart was a resistance area that I had found from a few days ago, and it bounced off of it really nicely. So I ended up, like I said, I took the long here and made a nice push up, and I scaled out. I took two contracts, so I had one. I think I scaled out of one right around here, and the other one I took off pretty much actually right almost here at the top, right before it reversed at 27.90 and a quarter, I believe, was my exit there on my final contract. Now, it would have been nice to go short on this, but what happened was my concern was that I didn't, you know, I was waiting for it to come up to test the resistance up here, but obviously, as you can see, it didn't get up there. It just came pretty damn close, but unfortunately couldn't make it, so there was no trade there. So I just kind of sat on my hands and waited. And it ended up chopping around. One thing I did actually do, just make that smaller, there we go. was I actually took, and this is kind of an Andrew trade here, is I actually went short right here at the VWAP. Now, once again, scalp trade. Obviously, your risk to reward was, risk was, VWAP here with the reward down to the support level right around here. It was a scalp trade. I took about, I got like a point and a half out of that. So, really not the greatest of trades. It was more of a just kind of testing a theory, just seeing how the VWAP played into this. And as you can see, it came down. It came really close to the support level, and in trading, close is close enough, is as good as you're going to get. So I unfortunately, just took off right here, and that was the end of that trade. And then that was it. I kind of just sat on my hands for the rest of the day because, as you can see, this is nothing but sideways balanced chop. It's just, consolidation going nowhere, which we expected today based on the FOMC meeting tomorrow, the quadruple witching at the end of the week, you name it, many reasons going on there. So I just stay out of this. And that was basically it. And then, like I said, the last trade I took just before I started this recording was on this breakout right here, right above the resistance level. And like I said, volume, nice high volume came in, pushed it out. Unfortunately, there wasn't enough follow through. If you look at the volume here, look at the volume here after the high volume breakout, we didn't get that sustained volume. I would have liked to have seen, volume up here, in the, subsequent bars, or at least, relatively close to the volume breakout. Fortunately, it didn't happen, and as you can see, price is just kind of chopping around. We're not really getting much activity or action. So, that's what we expect for the rest of the day. We'll see how tomorrow goes. Obviously, the FOMC meeting is going to be a big deal, but, once again, we'll see what happens. Now, I do want to talk about psychology a little bit because this is something that I have struggled with in my nearly 6 years of doing this. Now, I've traded, like I said, on and off 6 years. And my issue typically is myself. I get in front of myself constantly. I've read all the books. I'm in the process of reading, Brett Steenbarger's book right now. I've read, the Trading in the Zone books by Douglas. You name it, I've basically read it at this point. And, they all have the same premise in mind. When you have a fear of missing out, when you have a fear of losing or a fear of being wrong, and that's unfortunately all of my fears. It's tough. It's really hard to overcome. I hate losing money. I mean, who doesn't? Obviously, that's a given. But it comes from, I'm not going to get into psychological things here. My childhood and just stuff that happened back then that I had this deep fear of losing my hard-earned money. So when a trade goes against me, in my mind that switch flips. And even though the trade hasn't fully played out yet, I'm still kind of waiting. I'm just kind of seeing what happens. But once it goes against my entry, and even though I have a stop in place, as it gets closer to my stop, the fear and the anger and the irritation just starts to build exponentially. And more often than not, if you were physically here with me, I feel bad for my poor desk. I slam my fist as hard as I can to my desk because I get so pissed off, so angry that A, I lost money, and B, which is just as frustrating for me, is I was wrong. Here I am, I'm following a system, trying to follow a system, looking at all these crazy lines I have on my screen, support, resistance, you got VWAP, you got moving averages, which I don't really use as much anymore. You got all this crap going on, and yes, it's a lot of information, but as you can see, price stays within these levels, and it follows these levels really well. So what really gets me going or gets me upset is I take a position saying, hey, look, you know what, we're going to get, a bounce off of this level here, for example, and it goes through it. And I say, what the hell? What'd you miss there? How could you have missed that? What are you doing? And of course, what do you think happens? You say, aside from being wrong, which is one of the bigger issues, is now you're questioning your strategy because you're saying, well, what the hell? My rules state that I should do this, I should fade this zone, I should, short under VWAP, whatever your rules state, and you follow that, and what happens? The trade goes, it doesn't work out, it fails, you take a loss, whatever. Now, obviously, as traders, that's part of the game, that's part of the business. We're going to take losses. I mean, I run a computer business, I'm a consultant, and I've had a lot of clients, I've lost some clients over the years, I've had some losses because of, various issues, whatever, and in that environment, it's, it sucks, it's annoying, but such is life, it's part of business, you move on. However, with trading, for whatever reason, and, I'm still trying to really figure this all out, I guess, and explore this. In trading, when you're wrong, the emotion that comes in just, no matter what you misread or read, and you could have read everything properly. Just sometimes, the market goes against you. That shit happens. You get some big player in there that just says, the hell with everybody, and sells his position, and you're caught in the aftermath. But in trading, it becomes this. At least for me, I just lose sight of everything else. I get so pissed off and frustrated and upset by what happened that I can't clearly look back and say, well, dude, you were right. Unfortunately, you just got caught in someone's aftermath. Or, okay, you were wrong, so why were you wrong? Instead, what do you think happens? I get all pissed off. I say, F this, F that, bang my head on my hands on the desk, and that's it. And then I end up taking shit trades the rest of the afternoon. I start scalping and doing all the wrong things because, it's obviously the fear of losing money, which obviously is a big one, and being wrong. And it's tough because obviously no one wants to be wrong, and you can only be right 60-70% of the time when it comes to this. But you have to, I guess, or I have to in this case, learn to accept that fact. And one thing that I've been doing lately before the market starts, I sit here in front of my computer. I've got 7 monitors. I'm surrounded by charts and screens and all sorts of goodies. But I sit here and 9:20, 9:25ish, right before the market opens, I center myself, or I try to center myself. And it's not easy, and it's something I'm still learning to deal with and do and everything. And I just sit here and I take a few deep breaths. I focus on my breathing. I try to ignore everything else that's happening around me, and I just, kind of tell myself some affirmations. Obviously, you know, I'm on the fence about, saying to yourself, oh, everything's gonna be great, it'll be great, and then you have a shitty day, and you're like, well, what happened to my affirmations? But the point that I'm trying to make here is by meditating and slowing yourself down and just trying to clear your head, allows you to kind of see things in a more objective view, from a more objective perspective. Because when you jump into something feet first and you're all tied up and this happened, that happened, and you're like frantic at the open and in the first hour, you're not going to make positive or proper decisions. You're going to be all over the map. You're going to be taking horrible setups. You're going to be seeing things that aren't there. You're going to be doing things you shouldn't be doing. So that's one thing I've been focusing on. Another thing too, and I know this video is going to end up being very long, but you know what? Whatever. I think this is good stuff. It's good for me. I'm sure it'll be good for you guys too. But one other thing that I tend to do is, I get very antsy. The market opens, ding, 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 the bell rings, and I'm freaking out. I'm like, oh my God, everything's moving. Holy crap, let's trade. And I have a little sticky note on my monitor now, my primary monitor, that says, be patient, wait for the setup. And every morning after I meditate, I take a quick look at that and I say, okay, keep that in the back of your mind, because all too often, and I'm sure there's many of you out there that have the same issue, the market opens, price moves, volume comes in, and you're just like, oh, let's go. And, a good trick is wait in the first 5 minutes. You want to wait for that first 5 minutes of candle to close, because that does give you a lot of information. If you're looking at a 2-minute chart or a 1-minute chart, you're going to see, jumpiness all over the place. Not going to have a real clear sense of direction, but at least that first 5-minute candle gives you that, sense of, all right, we have something here. But I think what happens, and funny thing is, I'm not a gambler. I went to a casino about a month ago, and here I was with a friend of mine, and he spent thousands of dollars, putting money into these slot machines. And I'm sitting there next to him, putting in $1 at a time, just drinking free drinks, because I'm not a big gambler, ironically enough. And I'm sitting to myself saying, hey, this is funny. Here we are at this casino, they're making all this money. Well, the casino's making all this money. And here we are as the patrons putting money into a machine, pushing buttons, expecting some sort of return. There is no sense of skill involved, unless you're doing table games or whatever, which I'm not into that. I just play slot machines. But, with a slot machine or anything that's, more automated, there's no skill involved. You're literally putting money in a machine, pushing a button, and hoping for the best. That's just a skill and luck. With trading, we do have the benefit of using technical analysis, using chart patterns, using all the different skills that we've, built over the years, whether it's through Andrew, on your own, whatever it is, that gives you a bit of an edge or gives you the upper hand. And, when the market opens, it's kind of like going to the casino and hearing all the, seeing all the lights and hearing all the noises and ding, 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 and you're just like, oh shit, there's a machine over there. Let me put $100 on this machine. And next thing you know, your $100 is gone in 2 seconds, and you're like, well, what the fuck? And trading, unfortunately, is no different in that regard when you're not patient, when you're not waiting for that setup. When you just see those colors flashing on your screen, you hear those bells ringing, and you're just like, I gotta take a trade, buy. And next thing you know, the thing runs against you by 30, 40 cents, and you're down, a couple $100. Well, that sucks, and then that sets the tone for the day. So you have to remain as objective as possible, especially at the open in the first 15, 20 minutes, whatever. Because if you don't, you're going to pull what I've pulled over the years of getting antsy, shooting from the hip, and just jumping in because you see stuff moving. And of course, that doesn't turn out well. And, as I've learned, you have to be patient. You have to wait for that setup. And, you will be rewarded. And, I have to keep telling myself this because obviously, I have the business and I want to just trade, exclusively, from here on forward because I like trading. I enjoy it as a hobby. I enjoy it from a technical perspective, and there's a lot of money to be made in it. And I'd rather just do that than my business. But by forcing myself to take a trade that's not there because I have to trade, I have to make money, I have to do this, it's not good. And it's only going to just turn into pain for me. And that's more often than not the case. And, it's something that's not easy to overcome. And like I said, by trying to remain as objective as possible, by trying to keep your head clear, by sticking to your rules. And what I like about with at least trading the futures in this case is, we have these levels here, the support resistance levels that, are easy to find. I mean, you look at your market profile charts, you just pull up any, 60-minute, 30-minute, whatever time frame chart, you zoom out, you get the larger picture view, you draw out your, support resistance levels, and that's it. And you trade it. I mean, here's a perfect example. This thing is holding as support. It broke through the resistance, and now it's holding as support. Now, with the decrease in volume and going into the lunch hour, this could easily, come down here and, go from there. But it just goes to show you how clean this can be when you follow the rules. If you just jump in and say, arbitrarily, go short here because you think it's going to bounce somewhere in this range, well, guess what's going to happen? You're going to take a wash. So, you have to stick to the rules, and that's something that I have always struggled with, and of course, I tend to look at too much information. You probably noticed with the, these two charts down here, I have the NYSE advanced decline line, the ADD, and the NYSE tick. And this is just showing, the amount of stocks that are, trending up versus trending down, or, going up or going down. This is showing the difference between uptick and downtick in, I believe, the 2,000 or so stocks that are listed on the NYSE. So it kind of gives you an example of, are we more of an up? Is it more of an up day? Is it more of a down day? Or are we more neutral? That's what the zero line is here. So, I use the ADD more than I use the tick because the tick just kind of gives you an overall general picture, whereas the NYSE, the ADD gives you a more of a trend, so to speak, for the day. And you can, like I draw trend lines on this, to kind of see, are we going to have a breakout? Because you're looking for divergences between the ADD and the tick and what's happening on the price action, on the actual contract. So yeah, I don't want to get too technical with this, just because there's a lot of moving parts to it. I'm still learning myself. This video is more just my first recap. Just kind of wanted to put this out there for you guys, kind of show you how I trade, what I'm looking at, and also talk about the psychological, emotional things I've been dealing with. And, I'm sure there'll be plenty more of that because, this week has been okay so far. We'll see how the rest of the week goes. If I love to do a recap on a really crappy day, and you guys can hear how how horribly angry I get and irritated I am. But the goal is to not get to that point. The goal here is just to kind of focus on the good stuff and keep it going. So with that said, I'm going to end it here. I hope you guys enjoyed this video. Definitely leave me some comments, and I look forward to doing more of these in the future. All right, take care, everybody.